There are many theories about the best investment strategy, with some specializing in value investing, while others focus on hedge funds. Regardless of their strategy, there are plenty of investors who have managed to beat the markets, and some have done so consistently for a long time. The most successful ones have made billions in the process, and in today's video, we're going to introduce you to 10 of the richest stock investors in the world. The wider public first took notice of Bruce Kovner when he was profiled in the seminal book Market Wizards in 1989, but the investor and hedge fund manager started his investment career more than a decade earlier. Kovner attended Harvard, but dropped out just short of earning his PhD, instead taking on a series of odd jobs including driving a cab. His first trade in 1977 was bankrolled by a $3,000 cash advance on his MasterCard, and according to Kovner, this trade in soybean future contracts taught him about the importance of risk management. Later, he was mentored by legendary trader Michael Marcus at Commodities Corporation, which is now a part of Goldman Sachs. Kovner reportedly made millions and gained widespread respect as an objective and sober trader during this time, and it ultimately led to the establishment of Caxton Associates in 1983, which at its peak managed over $14 billion in capital and has been closed to new investors since 1992. In 2011, Kovner retired from his position as CEO at Caxton, while continuing to act as director of Synta Pharmaceuticals until 2016, a position which he had held since 2002. Thanks to his various investments in business ventures, Kovner accumulated an estimate net worth of $5.3 billion, and following his retirement from Caxton, he established CAM Capital in 2012 to manage his investment, trading, and business activities. Paul Tudor Jones II is one of the most successful hedge fund managers. He's known for his macro trades, particularly his bets on interest rates and currencies. In 1980, he founded the Tudor Investment Corporation, an asset management firm based in Greenwich, Connecticut, that focuses on assets in fixed income, currencies, equities, and commodities assets classes. According to Jones himself, he is the most conservative investor in the world for one simple reason: he hates losing money. So when he's investing, Jones tries to avoid taking any risks and says he doesn't like the idea of having much of his money tied up in stocks. His success has made him a multi-billionaire worth an estimated $5.8 billion, and since opening up his flagship Tudor BVI fund in 1986, the Memphis, Tennessee-born trader has posted an annualized return of about 26%, investors say, a strong and steady performance like very few managers of hedge funds can boast. Born in Hungary in 1930, George Soros is a renowned hedge fund manager and one of the world's greatest investors. As opposed to Warren Buffett's slow and steady approach, Soros likes to make bold yet very profitable bets. The billionaire investor became known as the man who broke the Bank of England because of a transaction he made on September 16, 1992, the Black Wednesday UK currency crisis. On this day, Soros made a single-day gain of an unbelievable $1 billion by short-selling $10 billion worth of pounds sterling. This successful bet also cemented his reputation as one of the premier currency speculators in the world, and today, Soros is known for the unmatched success of his Quantum Fund, an investment of just $1,000 back in 1969 when Soros established the Quantum Fund would have been worth $4 million by the year 2000, as he achieved a cumulative 32% annual return during that time period. Today, the 90-year-old may be officially retired, but he has been known to make the occasional trading bet, still adding to his estimated net worth of $8.6 billion. Born as the second of three children of an accountant and an elementary school teacher, David Tepper came from humble beginnings in Pittsburgh, Pennsylvania, and paid his way through University of Pittsburgh by working in the library. He received a Bachelor of Arts degree in economics and graduated with honors. After graduation, he entered the finance industry, working for Equibank as a credit analyst in the Treasury Department. In 1980, unsatisfied with this position, he enrolled at Carnegie Mellon University's Business School to pursue its then equivalent of an MBA, a Master's of Science in Industrial Administration. After earning his MBA in 1982, Tepper accepted a position in the Treasury Department of Republic Steel in Ohio, but was eventually recruited by Goldman Sachs in 1985, where he stayed until leaving to start his own fund, Appaloosa Management, in early 1993. Forbes listed Tepper as one of the 25 highest-earning hedge fund managers in 2013 and 2016, and his current estimated net worth is $13 billion. Steve Cohen is probably one of the most followed stock market legends, as it seems like he can't make a move without the financial press reporting it. Cohen got a Wall Street job as a junior trader in the options arbitrage department in Gruntle & Co. in 1978 after graduating from Wharton, and on his first day of the job, he made an $8,000 profit. In 1992, Cohen started SAC Capital Advisors with $10 million of his own money and another $10 million from outside capital, and quickly gained a reputation as a hands-on trader, often managing up to 10% of the portfolio in his SAC Capital Partners Fund. However, run-ins with the SEC caused Cohen to shutter the SAC and turn it into a family office in 2014. The insider trading scandal didn't hurt Cohen's personal wealth, though, and he is still one of the richest investors with an estimated net worth of $14.6 billion. Ken Griffin is another Harvard alumnus who began investing during his first year at university. A year later, in 1987, Griffin launched his first hedge fund, which was seeded with $265,000 and included money from his grandmother. The fund launched in time to profit from his short positions at the time of 1987 stock market crash. After graduating in 1989 with a degree in economics, Griffin founded Citadel, a multinational hedge fund, which is considered one of the most successful hedge funds in the world today, and with $14 billion under management, one of the largest as well. In 2003, aged 34, Griffin was the youngest self-made individual on the Forbes 400, with an estimated net worth of $650 million, while he is worth an estimated $15 billion today. At 71 years of age, Ray Dalio is worth an estimated $17 billion today, but he had already started his investing career at the tender age of 12 when he bought shares of Northeast Airlines for $300 and tripled his investment after the airline merged with another company. He later earned a bachelor's degree in finance from Long Island University, and then an MBA from Harvard Business School in 1973. 2 years later, he founded investment management firm Bridgewater Associates out of his apartment, which became the largest hedge fund in the world in 2005. As of January 2021, it had approximately $150 billion in assets under management. Dalio is also known for his Principles, a self-published 123-page volume that outlines his philosophy of investing and corporate management based on a lifetime of observation, analysis, and practical application through his hedge fund. In 2017, Simon & Schuster published his book, Principles, Life and Work, which was a New York Times #1 bestseller and Amazon's #1 business book of 2017. And Dalio also announced that he will write a second volume, Principles, Economics and Investing. More recently, he has also shared his investment secrets on short, animated videos he narrates on YouTube. Carl Icahn, founder of Icahn Enterprises, is a highly successful activist investor. As such, he likes to buy extremely cheap businesses that the market hasn't shown much love to, and then builds large stakes within those companies to be able to influence the board of directors and provide guidance on the strategic operations of the companies. Icahn has at times been so active that there is something known as the Icahn lift in the world of investments. This phenomenon describes the surge in stock price when Carl Icahn starts acquiring shares in a company. Some consider Icahn a more successful investor than business tycoon Warren Buffett, and in some ways, he has an arguably better record. From 1968 through 2011, Icahn grew his original $100,000 investment in his firm at a 31% annual rate, while Buffett's Berkshire Hathaway had only a 20% annual growth rate. While this statistic doesn't offer a full picture of each investor's stock picks, it is still an important point of comparison. Icahn's return rate means that every $1,000 invested with Icahn Enterprises back in the late 60s would have turned into $325 million today, which explains how he accumulated a net worth of $17.4 billion. Unlike most other investors on our list, James Simmons didn't start his career on a financial path, but instead graduated from MIT with a bachelor's in mathematics and UC Berkeley with a PhD, also in mathematics. In 1964, Simmons was recruited by the National Security Agency to join their code-breaking program during the Vietnam War. Then, in '68, Simmons was appointed chairman of the math department at Stony Brook University, a position which he kept for 10 years. In 1982, Simmons founded Renaissance Technologies, a hedge fund management company which specializes in systematic trading using quantitative models derived from mathematical and statistical analysis. It operates 3 funds and is widely considered one of the most successful hedge funds in history, with their flagship Medallion Fund having returned an average of 39% annually after fees to its investors between 1988 and 2018. Simmons shuns the spotlight, but that doesn't make him any less successful, and with an estimated net worth of $23.5 billion, he is the second richest stock investor in the world. Known as the Oracle of Omaha, Warren Buffett is considered the epitome of the smart and successful investor by many. The chairman and CEO of Berkshire Hathaway is certainly one of the most famous and most experienced investors, as he has been investing in stocks for several decades. He made his first investment at the age of 11, buying 3 shares of Citi's Service Preferred for himself and 3 for his sister. In high school, he invested in a business owned by his father, and after graduating from University of Nebraska with a Bachelor of Science in Business Administration, he went on to earn a master's degree in economics from the University of Columbia in 1951. Buffett then worked different jobs at different companies, including as an investment salesman, a securities analyst, and a general partner, and eventually as chairman and CEO of Berkshire Hathaway Incorporated. Buffett became a millionaire back in 1962, and a billionaire when Berkshire Hathaway began selling Class A shares on May 29, 1990, with the market closing at $7,175 a share. As of February 26, the 90-year-old business tycoon is worth $92.3 billion, according to Forbes, which ranks him as the 4th richest person in the world.